Hello, and thank you for tuning in to another brief video brought to you by myself, Dan Scharlach, and my firm, Innovative Wealth Partners. Today, I want to talk to you about a theory in money called MMT. MMT stands for Modern Monetary Theory. And this is the latest and greatest theory or concoction brought to you by some of our politicians who believe that overall, in general, there is no problem or no worry about increasing and utilizing central banks along with many different varieties of debt instruments and spending policies in order to accomplish the end desired result with economic guidance and unemployment or employment issues. So that was a lot stated in a very few number of sentences. We are going to use this video today to develop what exactly that means and try and keep it in a somewhat consolidated format, but we are also going to provide a little bit of insight as to things that you can look for or watch for that might impact you as an investor, and then just give you a little bit of guidance as to some action steps that we might be able to take if we are excited about this or are concerned about this. I can imagine this being somewhat of a controversial issue. I know it is inside my mind. However, today we are not worried about that. We are focused on the potential of what is to come. So without further delay, the disclosure that I need to state for compliance purposes is the fact that the economic forecast set forth in this material may not develop as predicted, and there can be no guarantee that strategies promoted will be successful. So, without more delay, let's get into this. As I stated, a lot of the policies and the policy decisions that are contained inside the MMT concepts revolve around debt and spending. Some of the primary focuses or the primary efforts, I guess, to accomplish this theory are enacted by not only a government, but also a central bank that is willing and able to participate and help the government accomplish their objectives. Most of the MMT proponents would say that almost all, if not all of this, is going to be driven by unemployment or employment numbers, right? So if we think about what is the entire basis behind the theory, the central banks and the governments would argue that the theory is driven by and almost 100% driven by employment. We feel like that this is actually part of the truth, and I guess from our perspective, we look at people's actions along with their words. So as we look at the actions here recently of the Fed, our Fed, and then also many central banks or other countries' versions of their Federal Reserve, we have seen countless times here recently as a notable one where the Fed will, or our central bank will say one thing and then kind of change their tune down the road when they see some economic trends that they like or dislike. And what we mean by this is here recently, our central planners have guided, for lack of a better term, our future policy actions to be much less in line with what they would have said all throughout 2017 and 18, which was simply that our balance sheet reduction or quantitative tightening was on autopilot and that we were on course to raise interest rates multiple times throughout the year. Here recently, actually in January, February timeframe, our central planners have came out and educated us that that has somewhat changed and that maybe moving into the future, The tightening process is not on autopilot. It's contingent upon, again, they would say employment. It's also kind of a guidance of economics. So as we've seen some challenges, I guess, in the Fed's eyes in the economic landscape, that combined with some of the employment stats that they have seen that maybe they haven't liked, I'm not sure what those might be, but those two together have caused them to kind of change their tune and maybe be a little bit less concerned about tightening and more concerned about just future guidance and maybe an anticipation of something that's coming that might be a change. So a little bit more to this, but sometimes we have seen the Fed's actions or our central planners' actions be a little bit driven by what's going on currently in the market and maybe a little bit less by what they have originally stated. But neither here nor there, we aren't going to worry about that today. Today's focus is going to be getting back to MMT. Okay, now, before we get into too much detail on this theory, I want to give credit to the person who created this. This was certainly not something that I could concoct in my mind, at least from a working or functional perspective. But Professor Stephanie Kelton is the primary individual that I could find and give credit to. I'm sure there are many others that came up with putting or packaging this theory together and calling it MMT. One of the primary things that this theory believes and would hold true as being a critical step is that a government would have a participating central bank attached to that same entity. Okay, so really a lot of this being revolving around debt. What that means is that without the central planning agency and the spending agency, this won't work. So the theory goes, since you can print unlimited amounts of money to pay for basically whatever you want when you have a central planning agency, that it really doesn't matter what you spend. And what does matter is the future success and guidance of the system overall. So Stephanie was instrumental in coming up with a lot of these ideas, along with other economists and other, I'm assuming, other professors that have helped her putting these facts into maybe a more presentable, better named concept. But again, most of these things would revolve around future guidance, okay? So looking at today's facts and then allowing the federal governments and the central planners that are participating in this theory or concoction, allowing them to have a lot of flexibility with what they do and what they don't do, okay? And this isn't just rates and money. This is much more comprehensive than that. This is going to include anything that they deem to be harmful to the future of the economy. Okay, so if we see any sort of a harmful downturn to the future in the economy, the theory would allow the federal government, I assume any other entity, state governments maybe, theoretically too, but mainly the federal government, since they can print the money, they have the capability to use whatever growth methods they need to not harm either unemployment or the economy, which could also mean the market. Okay, and this is also an integral part, because they would argue that rather than allowing the free market or the supposed free market to allow them to do the hiring and the firing and run the businesses, this theory oftentimes would allow the government to step in and to create the dollars or to create the demand for the dollars and to start projects and start things on their own. So if we need new bridges, new projects, new whatever in order to spur economic growth, that we could start that at the government level and then allow the consumers to be benefited by the spending that the government is doing. This is obviously a little bit of a shift from the system that we've been operating under, but it is something that is really based around the model of government being able to cause growth and government being able to control everything in the economy and basically guide and coax the economy in the direction that they see best and that they see fit. There's actually a little bit more to it than this, but those are the primary driving factors. The idea behind some of the problems that this might have created in the past would be somewhat squelched or somewhat able to be tamed down by some of the theories that are packaged with this MMT. Okay, so inflation would be another one. In the eyes of MMT and this theory, inflation is only a problem when full employment exists and when somehow the magical formula that the government creates with their monetary supply and their job creation, combining that with employment, there's some sensitive line there. We don't exactly know where that is, but there's some sensitive line there that the government can walk down and just and be able to contain inflation, because again, inflation is driven by, in this theory's mind, employment. So they can contain inflation and do all this just by micro analyzing and by micro dictating the policy decisions, which will then guide the entire thing and help the entire structure of the economy just to work perfectly and harmoniously together. So I know that sounds really great to us and to many other theorists that have looked into this. The historical perspective in how this has failed to work in the past is the other side of this coin. I think that's something that's conveniently left out of the equation for the discussion of this, and we'll leave it out of our equation too. The last aspect of MMT, or a couple of aspects of MMT that are worth noting, are specifically revolving around politics, which I don't want to get into a lot of details on, and then inflation. MMT would believe that inflation only becomes a problem when the government is not able to toe the fine line and balance the idea of employment or unemployment, depending on how you look at it, and monetary theory, and then you combine that with the inflation numbers. Okay, so somehow the government has figured out the magic ability to be able to use spending, their own job creation, and monetary theory to be able to control inflation exactly to the confines of where they want it to fall and where they do not want it to fall. If that is something that is able to be accomplished, I would be thoroughly impressed. I have never seen that in the past, but anything's possible, I guess. So that would be a great feat if they would be able to accomplish that. The other aspect that we wanted to note is how likely this is to happen in the future. Okay, so what we have seen, obviously, over the course of the last 20 or so years in politics is that we have gone from one polarizing politician to another polarizing politician, at least from a presidential perspective. And we have our own political opinions, but that really isn't important for this video. What is important is if this theory is likely to ever come to fruition or not. And we would argue, actually, that most, if not all, Democrats, and maybe even most, if not all, Republicans might be able to buy into this theory. Not going to put words in other people's mouths, so I don't know, but from my perspective, I could see it being very much a no-brainer for the Democrats to get on board with this. And if I look at a lot of the philosophies in this idea, and then a lot of the things that Republican political people have been discussing lately, I don't know if I could see it being that far off that they would support this sort of theory when it comes to their talk on infrastructure and some of the spending that we might need. So in reality, we don't know when or if at all the market will constrain politicians. If that would happen, that might be a different scenario. And when we say market, we would mean not only the equity market or the economy as a whole, but I guess when we say market, there are other forces that we might be talking about. If there's a social force that could dictate or require the politicians to dictate a certain set of decisions. However, for the aspects of this video, we could see both political parties buying into at least some of the aspects and some of the values behind MMT. Now, that is something that you and I should both be concerned about, because that is something that will impact us moving into the future when it comes to our financial matters. So that was really the reason for us wanting to create this video. We hope that we have educated you on a fairly new theory that's out in the marketplace, and also given you some insight as to whether or maybe whether or not this will impact us. We feel like it's something we should at least consider planning for. Now, some of the down in the weeds ideas, or the more detail-oriented aspects to this theory, we're not going to get into in this video, but some of those might fall by the wayside. This might have to be something that's put into the system and the decision making maybe rather slowly, over time, as most things are when it comes to politics. But this is something that could happen, so we should be aware of its existence, and we should just keep it in the back of our mind. Thanks for checking out this video, and we will talk to you soon.